Paul, it looked like we were heading into tomorrow's event, bulletproof, cruising to new highs, and then, I don't know, we got a little choppiness today. Are we at risk of anything derailing this tomorrow?
You know, I'm not sure that we are. I think really what everybody's going to be focused on, and I saw just a ton of news feeds on, was the dot plot.
Right.
And there's actually some discussion that we might do away with the dot plot, which I think actually would be a good idea. Because I'm not sure that it really gives you a good idea of where people are today and predictive value going forward. May tell you what I'm thinking today, but I'm free to change my opinion next week depending on the data, because we are all data dependent. So I think really we're rallying in advance in anticipation that it's going to be steady as she goes. We're going to be patient, and the economy is okay, but there's some soft patches here, certainly in the first quarter. I think expectations are we pick up a little bit in the second half, but certainly looking at the inflation numbers, not enough to keep the Fed, or should be enough to keep the Fed on the sidelines here.
Okay, here's the interesting thing, Paul, is that we start the show looking at our economic data in the rest of the world, right? Our bonds have been just so resilient. Some say, oh, they're telling us recession. Others say, well, yeah, look, they're doing what they're supposed to do if the Fed's got our back. If we look at this rate of economic surprises, Paul, we're just going to bring it up here, but I'll just tell you what it's showing. It's basically showing that the Eurozone's rate of surprising to the upside has zoomed past basically everyone else. That doesn't mean their data is great or robust, but it means maybe expectations got a little carried away. Us, on the other hand, our data is going south in terms of its beat rate over the past 2 months. So how does Powell come out tomorrow and say, you know, the rest of the world is dragging us down if maybe expectations got carried away?
No, that's true. But I mean, if you look at that chart and you go back over time, it really is just, it kind of cycles around, because as the economy improves, economists tend to undershoot what actually comes out in the data. And then all of a sudden they realize, hey, you know, this is getting pretty good, so we're going to jack up our estimates. And then all of a sudden we don't hit those estimates. So it tends to move around a lot, and it's interesting only from the perspective of where are we today and where are we relative to those expectations. So certainly the U.S. has been undershooting expectations, and Europe, everybody is throwing out along with England. And so anything that's going to be coming from the Eurozone has got to be bad. And the data is okay. So, yeah, we're, you know, if I'm expecting you to fail and you get a D, you beat expectations. But you're right, it's not fabulous data. Yeah,
all right. Well said there, and a little close to home for my academic record, Paul. And I will also point out EM here that we're looking at on the chart, and the purple line has been negative. It's missing, and it's still not looking hot. A few decent points the past couple days, but it's not really improving drastically. So then, Paul, what is the risk? Is it just the risk that the market, you know, we get this kind of like sell the news thing where even if Powell does everything dovish, that we've already got it in our system? I mean, there's just no risks to this market right now?
No, I think there's a lot of risk in the market, and I think that risk is actually just as you described. You know, everything goes according to plan. The next question is, what's next? What's going to make the market go up here? We're already figuring earnings to be a little bit better, maybe in the second quarter or first quarter numbers. We have the Fed on the sidelines essentially all year. And at some point, we're going to maybe get a China deal, but that's going to be postponed for a while. And so all of those things are already known to the market. What's next? What's going to be able to move this market next? And we're not seeing a lot of economic data on the horizon that's really going to be pushing the equity market significantly higher. The economic data shouldn't improve dramatically. Inflation should be quiet. Global growth is sub 2. So I think we muddle through here, and that's where I think the bond market actually does have it correct. And I think the equity market might be a little bit ahead of itself and at least due for a 3 to 5% pullback here over the next few weeks.